The U.S. presidential election is a pivotal event for both the U.S. economy and the global foreign exchange Forex market. As the world's largest economy, any political shift in the U.S. can have significant effects on financial markets and exchange rates. Here's an overview of key economic and Forex implications. 1. Policy direction and fiscal spending. Economic impact. Presidential candidates often propose contrasting policies, especially regarding fiscal spending, taxes, and social programs. A candidate with expansionary policies such as increased government spending can stimulate short-term economic growth. However, higher spending often raises national debt, which might lead to long-term inflationary pressures. Forex impact. If policies are expected to spur economic growth, investors may find the US dollar attractive, leading to dollar appreciation. However, concerns about growing debt may eventually weaken the currency as investors worrying about long-term stability. 2. Trade policies and international relations. Economic impact. U.S. presidents play a crucial role in trade policies, including tariffs, trade deals, and diplomatic relations. Trade-friendly policies can boost exports and reduce costs for imports, improving economic growth. Protectionist policies, on the other hand, might restrict trade, raising costs for businesses and potentially slowing down economic growth. Forex impact. Countries that have strong trade relationships with the U.S., like Canada, Mexico, and China can see their currencies fluctuate based on expected U.S. policies. Trade restrictions might strengthen the dollar in the short term as the U.S. aims for self-sufficiency, but prolonged trade conflicts can lead to currency volatility. 3. Interest rate expectations. Economic impact. While the Federal Reserve independently sets interest rates, presidential policies influence inflation and economic growth, affecting rate expectations. Expansionary policies may lead the Fed to raise rates to counter inflation, while restrictive policies could keep rates low to stimulate growth. Forex impact. Higher interest rates generally make the dollar stronger, as global investors seek higher yields. Conversely, if election policies suggest low or stagnant interest rates, the dollar may weaken as capital flows to other high-yielding economies. 4. Corporate taxes and stock market impact. Economic impact. U.S. elections often bring discussions on corporate tax policies. Lower corporate taxes tend to spur investment and growth by allowing companies to retain more profits. This can support job creation, economic expansion, and higher consumer spending. Forex impact. Favorable tax policies can boost the stock market, attracting foreign investment into U.S. assets and pushing the dollar higher. A less favorable tax environment might have the opposite effect, with capital flowing out and the dollar depreciating. 5. Energy and climate policies. Economic impact. Energy policies, especially regarding fossil fuels and renewable energy, are often sharply divided between candidates. Policies supporting oil and gas may boost those sectors, while a focus on renewables could lead to a different economic structure, affecting everything from job markets to energy prices. Forex impact. The U.S. dollar is sensitive to energy prices, especially as the country is a major oil producer. Policies that affect the supply and demand for U.S. energy can directly impact the dollar. For example, renewable-focused policies might reduce dependency on oil, while oil-friendly policies might bolster the energy sector and support the dollar. 6. Healthcare and social spending. Economic impact. Presidential elections also bring discussions on healthcare, social security, and welfare programs. Policies that expand these sectors can increase government spending and debt, but also raise public access to healthcare and social services, affecting labor productivity and consumption. Forex impact. Significant increases in social spending can put pressure on the dollar as national debt rises, though strong economic productivity gains could counterbalance this. The effects on Forex often depend on how markets perceive the sustainability of such spending. 7. Investor sentiment and global market stability. Economic impact. Elections impact investor confidence, which is crucial for economic stability. Policies perceived as economically sound or business-friendly tend to boost investor sentiment, while those seen as extreme or risky may lead to cautious investment. Forex impact. A stable political environment generally supports the dollar, while perceived instability or potential market disruptions, for example aggressive tax changes or trade wars, might lead investors to seek safer currencies. The Swiss franc and Japanese yen, for example, are often seen as safe haven currencies when U.S. political risk rises. Conclusion: overall, the U.S. presidential election can shape economic growth, interest rates, trade policies, and international relations, all of which impact the Forex market. A pro-business, growth-oriented administration might strengthen the dollar by drawing global investment, while an administration focused on social spending might lead to concerns about fiscal stability, potentially weakening the currency. As traders and investors anticipate these shifts, they react in ways that can cause substantial volatility in the Forex market leading up to, and immediately following, the election.